Good day, folks. Hey, this is Steve Rhodes. It's just past 3, and I am ready to begin our second Celestial Charting Study and Probability webcast for all of you that are attending live. Thank you so much. We'll save the questions and answers session to the end. We can run this thing up to about 5 to 4. A lot of ground to cover today, and so, just write your questions down if you would, and shoot them off to me as we get to the end, or if you want, you can always send me an email at steve@tfnn.com, and thank you so much to all of you that have been in contact with me. For all of you folks that still haven't had a chance, please give me a call at the office. You can call me at the Tiger Metal Exchange number, 866-618-8888, or send me an email, and we'll schedule a time together. Just, about 10, 15 minutes, and I would really love to meet you voice to voice. So let's go ahead and begin. A little bit of housekeeping. For those of you that joined early, what I wanted to do is say there was a little piece that I was playing there, and that was courtesy of David, one of our Tigers, that sent that to me. That was the solar system model. You guys could download that if you want. It's at www.pwr-tools.com/simsolar, SIMSOLAR, if you're so inclined. And it's a cool little package because it shows you where the planets are positioned each day, and you can kind of run through it. So it's an interesting little thing, and it's important because one of the things that we're going to be talking about today, other than just the lunar aspects, is the Venus-Uranus aspect. I think I've mentioned that to you in some of the daily updates or what have you, and I think you will find that if you thought the lunar, the new moon, full moon cycle was interesting, wait till you see the Venus-Uranus aspects and their impact on the markets as well. A little bit of housekeeping. The next date that we have for this webcast is going to be on July 27th, and that's going to be a real special one. You'll see as we get towards the end of this webcast here just how many aspects are taking place around July 30th, 31st, August 1st, and 2nd. So July 27th is going to be should have quite a few fireworks going for us. So you've got this chart here, and also on your homepage, folks, you should have right now, this should be pretty much what your homepage looks like here. So Mastering Probability, you've got your daily updates and the previous ones that I'll send out, and then you'll have some special reports. So just really going to try to separate this between any daily updates where there's some trades or any adjustments to stops or things of that sort, and then any type of special reports that I might put out. And those special reports can be dealing with some probability studies. They could be dealing with Gartley's butterflies, swing point tests, whatever it might be that I want to comment on. Much like I've been doing on the weekend reports, or this past weekend I focused on Apple. And then, so you'll see all of that, and then we'll break down the celestial charting piece of it. So what I'm going to try to do is just keep the lunar trades that we have, or anything else celestial that we might be trading. Could be the Venus-Uranus aspect, and you'll see that on the celestial charting. So, and you'll have all that. And then obviously for those of you that signed in already, you have, that the day of the webinar, the webcast, that the link will be live on your page. So that's on your members page. All your members pages should be looking like this. We should have everything pretty much in shape now. If we take a look at let's take a look at real quickly what we're going to do after we talk about the lunar cycles, is we're going to come back and we're going to take a look at this Venus-Uranus aspect. And what I have up on the screen here is July 7th, when we came into that high, when the lunar cycle failed. What it was also doing was it was coming into this Venus-Uranus aspect. And so we're going to talk about that in just a bit. Now, let's get back to the current cycle that we're in, or the cycle, quite frankly, that we're planning for, because what we know is that we had a new moon sell cycle that failed on that July 7th when the price shot up beyond that. And now we didn't get taken out. Our stops did not get taken out on our SDS strategy. Everybody should have been, taken out of their trades yesterday. And the reason that, and over the weekend, what I tried to communicate in the newsletter was that the we were not going to manage the trade anymore based on the new moon, full moon cycle. If that had been the case, if we hadn't had a failure, I would stay in the trade to the end, because that's what historically what it tells you to do. That is your best odds for making the most amount of money, for letting your profits run. Now, as soon as the failure occurred, but we still were in the trade. We were in the trade because of our money management, because of our stop management, because I recognized when I was placing the original trade where there were some other swing point areas, where there were some other Fibonacci expansion areas that made more sense for us to be able to place the stop. So we still were in the trade, and I was not willing to exit the trade because I knew that there was some other support areas or resistance areas, and I wanted to go ahead and let the trade play out. Now, what happened was, as most of you may have heard, maybe from one of the shows from yesterday, I was up at 4 a.m. when the market was literally crumbling, between the euro, between what was happening with the S&P futures, the Dow futures, everything. And if ever there was a day where there should have been momentum for us, for the market to continue to move down, yesterday was it. But you could see as the day was progressing, as there was intervention that was coming in, that there were other elements there. And what I did was I wanted to make much tighter stops than in the message that I had sent out the night before. And I wanted to say thank you to Randy, who, as I was driving into the office, he's another one of our Tiger subscribers to the service. He and I were speaking, and he did some nice calculations for me so that I could come up with stops that were a little bit of a volatility stop for us, much tighter, but still something that I've used before in momentum marketplaces, and we put those stops in place, and we let the market take us out and protect our profits. And I'm glad that we did, especially after, today's action. Now, today, right now, as we speak, the Dow is only up 75. S&P is at 8. The SDS, which we were in, is trading at 20.48. So, it made sense. And in another newsletter, I won't do that right here. I'll cover just exactly why or how I calculated those stops, how we calculated those stops. But one other thing that I did want to bring to your attention, and Matt, one of our other Tigers here, pointed this out to me, is the stop on the Doug. So when I was calculating stops yesterday and knew that I needed I wanted to have some tighter stops, the stop that I was calculating when I gave you a hard stop was especially on the Doug, was based on what I saw going on pre-market. So pre-market, when I took a look at what the Doug was trading, I think it might have been somewhere around 28.93. And the stop that I actually put in was 28.43. Now, as most of you know, when the market opened, it never got to 28.43. So, what I wanted you to do there was I wanted you to go ahead and take that trade off of the table. So hopefully everybody did that. I will make sure in the future that I am more clear that and what you'll do is, if you don't have access to a computer, if you're not following the markets because you're at work or whatever it is that you're doing, then I'll ask you to go ahead and put in a stop limit order. So meaning that if it's trading below that you just, or stop market order, so that if it's trading below that, you will just simply go ahead and get stopped out of the transaction. So thank you to Matt, Randy, and David for your help. Now, the chart that is up on the screen here, hopefully while I've been talking, most of you have been studying this. This is an important chart for you to understand. This is going back to the August time frame when which is the time period where we're taking a look at the new moon, full moon strategy, where it has been working with the bear market tactics, where I've gone ahead and flipped it from the RBS study. What you will see here is that the full moon has been working like clockwork. When I say clockwork, 10 out of 11 trades, so almost 91% of the time, this thing has been dead spot on. That, folks, is really a beautiful thing. Now, as you can see, I've got each of the dates listed there. So I've got August 24th as an example. It was a Tuesday. It was a full moon. Now, the cycle low there, what I'm doing is I'm giving a 2-day orbit on either side. So either 2 days forward or 2 days back. There may have been another low that was made 3 or 4 days, but when we take a look at the low that was put in either 2 days after or 2 days before or right on that date, that's what that column there represents. So it says 2-day cycle low made. So on August 24th, the actual cycle low was made on August 27th. Now, there was I don't know why I've got that 24. Well, that was when the actual low was made. But with regard to our 2-day cycle, thank you. With regard to our 2-day cycle, was actually made the following day, as opposed to right on that day. And the following day was made intraday near the close. Now, the outcome there was successful from a buy on the full moon for low of 824 was that. So that low on August 24th was tested for 5 sessions in a row, and you'll be able to see that when you go back and take a look at either the charts here or the charts that you have on your screen. The September 23rd time period, folks, the low was made right there on that date. The October 23rd, it was made the day before, so it was actually made on in this case here was Saturday, so it was made on Friday. So it was made on that Friday close. The 11/21 date was made 2 days after that date. So it was made on Tuesday, as an example. So when we take a look at this, the reason why I put that in there was because when we sum all of that up, as you can see in the lower right-hand area, in the lower right-hand area I'm talking about right here, is kind of our distribution of when the lows were made. And you can see that either on the day, which we have 45% of the time, is where the low was being made, or the following day has the next biggest percentage. So in this case here, we've got the full moon coming in on Friday. And what that does say to us is that what we should see is the low being put in on Friday or Monday. Now, of course, we've got the market up 51.88, and and what we want to be able to see is we want to see the market pulling back into us. Now, we'll see as we go through this. Even when that hasn't happened, we can. We'll talk about that in a minute. And what you can also see here is that there's one failure, and you'll see that on the chart. And on that one failure on February 18th, that's what I've got highlighted there. The market was definitely moving up. There were some new highs that were being made when you take a look at the left side of the chart with regard to any type of resistance areas. And, we're going to let this go ahead and play out, even though, right now we've got the Dow up 50 points. So the market is pulling back a little bit, and we're going to wait till Friday before we make any decisions. Obviously, we'll be watching tomorrow. We'll have a better clue, but really won't be till Friday. Really won't be till, towards the middle of the day, likely towards the afternoon. And based on what we see going on in the market, obviously I will be in touch with you and let you know. So this page here is important for you to understand. It's important for us to understand when we're taking a look at the new moon, full moon cycle. But what this is telling us is if we're going to take a position, we're going to do it either on Friday or on Monday. And, today wouldn't have qualified, even if based on what I saw going on in the marketplace yesterday and said, okay, folks, let's go ahead and take a position. Yesterday that really wouldn't have qualified because it was too soon. So we're just simply going to wait and watch how this plays out, especially based on the last cycles. If we take a look at where we're at right now, I think I posted this chart here. I'm not sure, maybe about 10, 15, 20 minutes ago. So it's a relatively current chart. So when we are taking a look at this, now what you can see up here again is you can see this Venus square Uranus. And really what that is talking about, square means 90 degrees. And we'll talk a little bit more about that in a few minutes. What we can see that the S&P has done is what it did today was it retraced up to that 0.382 area, that 1329.81, and it has been moving back. So it's possible that what we've seen here is just simply a one-day move up, an AB's, and so we'll see. So we'll just have to wait and see how the market plays out. What I was looking at as the market was moving down, as I had been working on my slides over the weekend for this presentation, what I had been looking for the market to do was actually pull back to 1273.18. That was what my projected entry is for the for the S&P trade. Now, why did I come all the way back to there? Well, number one, what I was looking for with this down move here was at least coming back to the 0.786, this 1279.16. But what you can see here in this down move that we have this candle right here, and that's a hammer candle. And a hammer candle, oftentimes, those are going to act as strong support. So what I really wanted to be able to see, what I would love to see coming into Friday, is I'd love to see the market move back. Because if the market pulls back, and I'd really love to see it pull back into this candle, because the hammer candle is a candle that, and the reason why they call it a hammer is because you have this little body up at the top and this long wick. And what you can see is that the bulls ended up, and this is what we want, the bulls had control of that day of trading. And when you see a hammer candle that is taking place at the bottom, folks, your ideal entry area is the halfway point of the wick. So you'd measure it from the bottom of this area here, not the entire candle, but the bottom here, all the way down there, and you'd like to be able to be buying at about the halfway point. If you can buy, the closer you can buy to the bottom, the better off you are, because your risk reward, your back is up against the wall. You don't, a stop below a close below the hammer, and you get out of the trade. I mean, you can almost do it to the penny, because that should be strong resistance. Just as on this day where the bulls were able to take control and push the market up, it should also work like that when that area gets tested. So just like on the last trade, the morning of, I think it was maybe I knew I had my price in at 2020. That's where I wanted to get filled. The market opened up, but the first half hour of trading, you have to let the first half hour of trading play out, because that's where you're going to get a lot of information. It can't be the first 5 or 10 minutes of trading and you worry that the train has left the station. You got to let that first half hour of trading play out. In any event, folks, this is what we're looking for. That doesn't mean that if it doesn't get there, we're not going to take the trade. But that is what I was working on over the weekend, and I wanted to be able to explain to you that hammer candle and the importance of that. Let's go take a look at our next slide. And so on our next slide here, this is, let me make sure I'm in the right spot. There we go. Okay, so I am. So on this here, what I'm showing you are the full moon cycles. Looks like I've got them a little bit maybe out of order. Let me hit this one right here. Well, this is the chart here, which I've gone ahead and blown up, where we're taking a look at the full moon. So if we just take a look at the full moon on January 19th right here, and I've got the red line, what you can see is this area held. Now, it got tested, and that's why we have some stops that are put in place, because, this area can be tested, but we ended up with a successful trade here. If we take a look at this full moon cycle here, where we bought on December the 21st, now this is one where, okay, here's the reason why I put this one up here, because this is one that it's possible we might be looking at. And in this case here, where we had a full moon, where we were buying, where we would have wanted price to be coming down to us, obviously, it didn't work out here, where price was moving down. But what this was also signaling to us on the following day, that this gave us the indication that the full moon cycle, even though price had moved down into us, it still was working. And so we may, if the market moves up into this full moon, we will sit and we will wait for more information to be released to us. And I'm going back even further to take a look at many other full moons when they have, when price has moved up, whether or not there's been a signal that's been given to us in 1 day, 2 days after. But in this case here, what I wanted to point out to you is price wasn't moving down, so I don't want to take that trade right then and there. I want more information with regard to what's going to happen. In this case here, the market moved up, it pulled back, which means we'll look for an entry area, just like on the last chart there, where we had this hammer candle, and if we were moving down into it, we know where we would want to be entering. And so, we're just going to have to wait to see how the market is going to play out. If we take a look at the next slide, the next slide here is where, we have the market, moving down into us. If we look at the September 23rd, we've got the market that had moved down into us. In this case here, you can see from this new moon of September, the new moon of September 8th, all the way to the high that it made here. I don't have the date on here, but the high that it made, and then it pulled back into the September 23rd area. To me, that looks like that probably was about a 0.382 retracement. So you had a nice strong move from there that was projected. We had this new moon. I'm not going to talk about this new moon here. We did have the market moving up into this full moon. Okay, and what the market did was, so we wouldn't have bought there because the market was moving up. We want to wait for information to be released to us. The following day, the market goes up, we come back down, and we get tested. And there, so that following day, it was releasing information to us. And that's what we're going to wait for in this case here if the market continues to move up. That is going to be a part of our trading strategy. What we prefer is we prefer for the market to move down into us. If the market moves down into us, we'll take the trade on Friday and or Monday, and without reservation, especially knowing that this has worked 90% of the time the last 10 out of 11 trades. Now, if we take a look at where we're going to be at with regard to our risk. This is, I will send this out to you on Friday. Sometime during the day with regard to wherever it is that we're in the market, assuming that we're going to take the trade. We may not, and then we'll redo some calculations. So what I did here was I did our normal risk calculation, and I want you to certainly get comfortable using this. This is, folks, where you're just simply taking 1% of your trading capital. So the first aspect of any trade, as you know, is taking 1% of your trading capital. In this case here, I'm just using an example of $50,000 worth of trading capital. Now, I've got two trades for us to be taking a look at with regard to going long. One is the SSO, which is the 2 times, and the other is the SPY. Now, what you'll notice here on the SPY, you'll notice that I've reduced that percentage down to 0.50, so that if we were in the trade today, and this is what we were taking, and these numbers are going to change, folks. If we were in the trade today, though, and this is what we were taking, what I've done is I went back and I took a look at the current week range that we had in the SSO, which turned out to be $1.48. That was through, whenever, maybe about 2 o'clock today, $1.86 in the SPYs. Then the full week prior, last week, and you can see here I divided by 8. Well, we really haven't had a full 8 days worth of trading because today hasn't closed yet. But just so for our example, and this is going to give us what that true range is, and then we're just simply going to use our multiplier, that's that 2.7, to go ahead and calculate our stop. Once we know what our stop is, folks, and we know exactly what our 1% is, that is going to tell us what our position size, our maximum position size should be if we want to protect just simply that 1% figure of our capital. In the case of the SPYs, though, I reduced that to 0.5%, because as you can see down here, all right, using 0.5% and still purchasing, which is 166 shares of the SPY, would have allocated 44% of our total capital, 21,000. So if I had used 1%, folks, that would have taken up 88% of the capital. And even though this trade here is based on 500 stocks, I don't want you using 100% of your capital on any one trade. So what I've done here is I back this off. I don't mind using 40%. I don't mind it being 0.5%, and I especially don't mind doing that when we're dealing with a ETF that is, is covering 500 stocks, and recognizing the risk that we have in there. There will be some point in time, folks, when we're using this system or any other system where your stop will get jumped, and instead of having a 1% loss, you'll probably have a 2% loss. But so far in this trading strategy, things have been working well for us, where we've only protected to, about our 1% loss area. So this, folks, here, you will see this come through to you on Friday. Hopefully you are also using this in any other trades that you are placing. You would use this for anybody's system. And if you use this, you are going to make a lot more money, and you are going to protect your nest egg much, much better. Let's take a look at our next chart. Next chart is where we're at right now, through yesterday. And this is the rewards that we've had. These are the losses that we've taken. The 1.0 loss means that we took 100% loss. Means if we had allocated 1% of our trading capital of $50,000 or $500, that what we have here, folks, is a $500 loss. That's what the 1 represents. Yesterday, when it closed out the SDS trade, it was a 22-cent per share profit. And so what this does is I've gone ahead and I've updated the expectancy table. The expectancy table being this right here. And so our expectancy on our 23 trades that we've made here is 1.63. 1.63 trades on $50,000 is netting us about a 42% return. So still in line with exactly what we looked at the last session that we did. That's where we're at with our lunar trading strategy. So the setup that we're looking at is going to be, we still want the market to pull down into us. If the market does not pull down into us, then what we're going to do is we're going to wait an extra day, and we're going to let some information be released to us. And if the market moves down, then, we'll take one action. If the market moves up, what we'll do is we'll look for an entry point. We'll wait for the market to pull back to us is the most likely scenario. But we'll make that adjustment on the fly based on market conditions and whatever else it is telling us. What we'll also be paying attention to is whether or not we are in a cycle where all of a sudden these cycles have inverted. So that is something that we'll have to pay attention to. But right now, we're not there. But it is something that is on my mind. I'm sure that it's something on your mind as well. So that's with regard to lunar cycle. Let's go take a look at the Venus-Uranus aspect. What I have up here on the screen is the symbol that you would typically see for Venus and for Uranus, Venus being the goddess of love and Uranus being the god of the sky and the heavens. Now, what is really where this is coming from, and I mentioned this during the last workshop, is what I have up on the screen here is a page from the New American Ephemeris, 2007 to 2020. This is a book that I would suggest that you have. I don't recall how much it is. Maybe it's $20, $30. You can check that out on Amazon. Or you can call Starcrafts Publishing. There's the number right there on your screen, 603-734-4300. Now, I know it's a little bit blurry here, but this is what a typical page on the ephemeris looks like. You've got in the area that we are going to be most focused on. First, the moon aspects are right in this area, right in here. And but the area that I want to focus on right now is what's down here, the daily aspectarian. What this area is doing here, this is telling us the angles between the different planets, and between the moon, the sun, the earth, Venus, all of the planets that are out there. And what we use this ephemeris for, and here is a blown-up portion of this. So this is showing you what aspects exist out there, either major aspects. And major aspects, what I mean by major aspects, folks, I mean these 5 different aspects right here. Those angles which we're dealing with: conjunction, which is at 0 degrees, trine, which is at 120 degrees, sextile, which is at 60 degrees, opposition, which is at 180 degrees, and square, that is at 90 degrees. Now, there's other angles out there, but the ones that we want to focus on the major aspects. When you go back and you take a look at the ephemeris, or you take a look at the daily aspectarian, it has many minor angles that are out there as well. And we don't pay attention to the minor angles except when we take a look and we count the number of aspects that you would have each day. Larry and I forget the other guy's name, I apologize, that had done a bunch of work, a bunch of studies on this, and Larry and I are doing new work studies on these p-index dates, is that on average you've got 8 to 10 aspects that occur. When you have an anomaly where you've got 3 or less or 14 or more, that was based on old work that was done, 10 plus years ago. Excuse me for just one moment here. Thank you. And when I'm talking about 10 years ago, there were a couple of other aspects out there, planets, Ceres, Pallas, Juno, and Vesta, that were not a part of the original study that Larry and his crew did. When you purchase this new ephemeris, this 2007 to 2020 ephemeris, folks, what's going to happen is you're going to have those aspects within inside here. So the original work that was done, which was less than 3 aspects occurring in a day, or more than 14, if you were to just count this here and you counted those other aspects, we don't know that the standard deviation really remains the same. So I'm doing additional work right now, additional studies, to identify what adjustments have to be made to identify a p-index date. So, in that work, it's going to take a while. It won't be done tomorrow. It won't be done next week. It's quite a bit of work and quite a bit of study to understand. But it is important to have this daily aspectarian. It is good to know what is in front of you, because here, with this information, we know exactly when these planetary angles are going to line up. So in our case here, again, folks, what we want to focus on what are the major ones, which are called square, opposition, trine, sextile, and conjunction. Now, as we continue on here, we take a look at the aspects of Venus and Uranus. I know this screen here is a little bit small. Don't worry, the next one will be a little bit larger and blown up. What I do want to show you on this screen here, the red lines here that I'm using show the actual date. These boxes, and so you'll see some of these charts that I'll be sending to you. And what you'll see on these charts, sometimes I may not have the red lines drawn in here. What you will see is the line on the left side of the box. The red line represents the date. On this one here that I'm circling, which is April 23rd, it says near. Near means that, April 23rd was actually a weekend. It was a Saturday or a Sunday. And so, the question of whether there was a high or a low that was established. Now, if you just take a look at this first chart, and we knew on July 7th, as the market was moving up, that was a Venus-Uranus square. So that was the 90 degree. And you can see how the market made a high. Obviously, this chart here that I've got up doesn't account for the last two sessions, but you can see the high that was made here. If we come back to that June 15th time frame when we were coming into our full moon, we also had a Venus-Uranus aspect. That's the sextile version. That's the 60-degree angle. And notice how that held. So not only did we have the full moon that was coming in there, we also had a Venus-Uranus aspect. If we come over here to April 23rd, you can see how the market held this area here. Came down and was tested the day of, market moved up, and so, there was a trade in here, absolutely. If we take a look at March 1st, you can see how we made a high, the market moved down. We take a look at this here, the market the second day made a high, there was a trade in here. If you take a look at this aspect that we had, what I'm doing, folks, is I'm going through all the Venus-Uranus aspects, and I will identify a trading plan for us, one that has a lot of historical information with probabilities so that we know how to trade this aspect. If we go back even further, this one here is probably going to be a little bit easier for you to see. I've blown it up a little bit more, and actually this is the blown up version of what we just were dealing with. Apologize for that. So you've got the July 7th. You can see you've got the April 23rd. You've got the March 1st, and what I'll do is I'll work on getting the information that's in there blown up a little bit better for you as well. So you will start to see these charts. If I go back even further, further here, now we're back in the 2010 time frame. Here, take a look at this Venus opposite Uranus, and that's that 180 degree that we would be dealing with. Look at how that made called a perfect high. Look at here we had and what this is also helpful with is in knowing this is when these areas get busted. Okay, so here, it went on and made a high, and then it came back down, and when this area gets busted, that is showing us some substantial weakness. So this is information that we absolutely want to know. Here we were in this downtrend, May 19th, it came and it made this high, continued to move lower, made a high right here. You can see how this information, this Venus-Uranus aspect, is really important for us to understand with regard to our trading. And so, as I say, I will develop a trading plan for us with regard to these aspects. So we've got these charts here, and all of this obviously is going to be on your members page. So feel free to go and study it. Take some more time. You might say, "Well, gee, Steve, you went through it too fast." So what I have done here is I've gone ahead and I've given you the aspects. And I've got 3 pages here, so let me just let the camera sit here for a moment, if you will. These are the major aspects for Venus and Uranus, 2011 to 2012. Now, you might want to go ahead and apply this to whatever it is you might be trading. Maybe you trade some commodities, or maybe you trade some currency, and you'll want to go to your chart and plot these on there to see if there is some type of turn, if there is some way that you can use that as a swing point, as a piece of information to help you with your trade, to put some probability on your side. And what you can also see here is you can see the July 7th Venus square, and notice August. So the next aspect that we've got to focus on is going to be August 1st, 2011. And what we also know, because we are all caught up on our lunar strategy, is we've got a new moon that's coming in a few days before that. So you can see that just as we had in one of our other charts, where we had on the June 15th, we had the new moon. We had the full moon. On June 15th, we had the full moon. We also had a Venus aspect, and so it's going to be really helpful. These are great tools, great, what do I want to say? They're great, they're great timing tools to be able to provide us with information and help us understand which direction the market is going to go. So we've got that. Now, you can go back further. Here's 2008 to 2010 if you want to go ahead and plot this back on any of your charts. Now, this is the information that you saw on my other 3 charts, but you can go ahead and plot this on anything that you want. So here is all of that information. Here are all of those dates, and I've gone back even a little bit further so that you can have the 2005 to 2007 time frame. So again, you've got all those major aspects for Venus and Uranus. And as I said, excuse me, I will be putting together a trading plan. And on our next webcast that we do, we will be looking at other planetary aspects that also have an impact, or we'll be taking a look at maybe some specific commodity, or we'll be taking a look at the P-index study, because I'll be much further along 2 weeks from now with regard to the continuation of the P-index study. So we've got that information here, and just for your viewing pleasure, if you want to go back even further, here are the 2002 to 2004 aspects, so that you've got all of this information right here. I think this is large enough, it's easy enough for you to see, and use this information. It doesn't take you too long to go back and plot that information. Now, let's talk about what, try to tie this information together and why it is that I, also chose the Venus-Uranus aspect. And one of those was because taking a look at what it is that we're going to be coming into on this by our next webcast, July 27th, what it is that we're going to be taking a look at. Because as you can see here, what I've listed out is all of the activity that is going to be going on right around that weekend. July 30th is the new moon that we have coming in. July 31st, what I've also done with all of the data from the ephemeris is, now the study that Larry and the other fellow that did the original studies on P-index dates. And again, the P-index is going back to that daily aspectarian, and what they did was they found that if you had 3 or less or 14 or more, that typically was a good timing tool to mark a turn in the market or the commodity that you were trading. Now, what I did, and all that was done also, folks, based on ephemeris time, Greenwich Mean Time, if you will, ephemeris time. Now, when we're trading our markets here, our stock markets, we're not trading based on ephemeris time. That is, unless you are trading you're trading a commodity, you're trading gold, you're trading currency. But I'm talking about the ETFs and so forth that we trade. So what I've also done is I've gone back and I've converted all the information in the ephemeris, and I've converted it to Eastern Standard Time, our trading time zone. So what I've also done is I've come up with P-index dates that are based on the Eastern time zone, and there are more dates that show up versus if you just use ephemeris time. So what we have also occurring on July 31st is we've got an Eastern Standard Time, what I call an old P-index date. Old meaning that we're not taking into consideration these other new planets that have been discovered since Larry had redone that work. So that means we're taking a look at it without Ceres, Pallas, Juno, Vesta. And so we've got that occurring on July 31st. And on August 1st, what we have is we've got a Venus-Uranus aspect. That's the trine. That's the 120 degrees that I mentioned before. We also, on August 1st, we've got an Eastern Standard Time P-index date, meaning a large one where we have 14 aspects. Now, this one here, folks, this one is the new version, if you will. This one is counting all of those those are the other 4 planets, if you will, into the cycle. And again, I don't know if the number 14, when we take a look at that, folks, may need to be adjusted to 16 or 15, and that's part of the work that I'm doing. But what we also do have is on August the 1st, we've got a new P-index date based on ephemeris time. That's what that 16 aspects is looking at. So we've got it on the Eastern Standard Time, we've got it on the ephemeris time, and on the ephemeris time, we've got 16 aspects. So to me, that likely is going to qualify as I do my studies. Now, the study that I'm doing goes back to 1800. So I'm looking at 300 years worth of data, and I have 300 years worth of data, and I know exactly how many aspects are in each day. There are some where there were 0, and there are some, I think the largest number might have been 22 22 or 24, something like that. And so I'm going back and redoing all of the calculations so that we can say with conviction that this is where the cutoff should be on the short side, on the small side, and on the large side. And then when I have that, I'll be able to plot all that on the, and I'll probably plot it on the Dow chart, just simply because I've got that going back to 1926. Well, what else do we have? August 2nd, we've got the moon at perigee, closest to Earth. August 3rd, Mercury in retrograde motion. And you'll see, just as I've done here with the Venus-Uranus aspects, when you have planets that are going in retrograde motion, they also have an impact. Some of them have an impact only on, more of an impact on a commodity like wheat or rice or corn or sugar or currency, but what we do have here, folks, is this July 30th, August 3rd time frame is going to prove to be a great trading area. And what we want to be able to see happen is we want to be able to see price line up with time. This is our time chart. And that is what we really want to be able to see. And so this is good information. Great information. What we see right now is we see that 0.382 that we had that came in today, has held up well. Right now, we've got the S&P's only up 1.75, and the Dow down 24. So, this is a sign that we wanted. This is a sign that we want to see this market pull back into, for us pull back into this coming Friday, and I'd love to continue to see this action take place. Now, we will also have, more, depending on what the market is doing. I will also have some additional trades for us, so it won't just be on the SSO. We will be taking a look at what most likely will be the strongest one or two indexes inside the S&P. So just like we did on the new moon strategy that we had on the 1st of July, what I wanted to do was not just take a look at only the S&P, but I wanted to take a look at the weakest player, because there we were selling short. And I'm glad we did. I hope that you're glad we did, because even though the SDS trade did not work out as well as we wanted it to, the FAS trade worked out terrifically. In a period of 6 trading days or so, we had about a little bit more than an 8% profit. So again, when we're going to take a look at this strategy here, especially if the market is pulling back into us, we're going to be taking a look at some of the stronger players out there, because when we go along the market, we want to go where the strength is at. So we'll be taking a look at some of those trades. So that completes the show, folks, if you will. And I am happy to take whatever questions that you have. And certainly, please, again, for all of you that have not been in contact with me, please give me a call. I love all of the feedback, all the comments. Some of the adjustments that I will, some of the feedback, some of the adjustments. What I'm trying to do is in the emails that go out, in the heading of the email, if there is some alert that you need to do right then and there, you will see that first. You'll be able to see that right in the heading. That way, if it's just a market update or something that I'm sending out to you, and you don't want to interrupt your day, doesn't really require any immediate action, you'll be able to come back to it. So take a look at that in the heading. As you know, I provide you a lot of information had great positive feedback on the educational piece of what I'm trying to do, so that you understand why it is that we are making the decisions that we are. But when we have a trade that is included in there, what I am trying to do is take that front page and put all the trade information. So I'll put all the trade information so that it's on the front page, so that way if you're viewing it on your phone, your desktop, whatever it might be, when you take a look at that front page, you'll have that information right there with regard to whatever action, and then behind that will be the detail, so you understand what is happening. So make those changes. If you have some other suggestions, and that's one of the reasons why I like speaking with you folks, is if you've got some other suggestions, all you have to do is just, give me a call or send me an email, and I'm happy to find some way to, because if there's something that could make you more efficient, then you're going to be able to make part of the team more efficient. And we've got a lot of players on this team, which is a really wonderful thing. I'm very grateful for all of you, and my promise is to work extremely, extremely hard for you. I take this stuff seriously. So it's 3:46, and are there any questions that are out there at the moment? Well, I'm going to take that there aren't, and that all the information here that we covered was pretty thorough. So if there's no questions, then we'll go ahead and end this. Obviously, this is going to be on your homepage, folks, so you'll be able to go ahead and come back and replay that. Obviously, we'll watch what takes place over the next couple of days, and then we know that coming into this July 30th, August 3rd time frame should also be another big time for us to be taking a look. So we'll cover all that on our next 2 weeks from today, July 27th. Thanks so much for your time, folks, and we will talk to you soon.